Hi, this is Brent from TradeGuild.blogspot.com, and it is June 4th, almost said July 4th there, 2007, and a couple quick little factoids about June. June pre-election years are stronger than average June, and June ends the Nasdaq's best 8 months, and the Nasdaq mid-year rally begins the third to last trading day of June. In the early 1900s, summer rallies were controlled by summer crops. The market back then was primarily a railway-driven market, so the outlook for summer crops would control the summer rally. Well, since the nation had moved away from farming, the summer rally had kind of faded off into oblivion. And in the mid 1980s, it started to reemerge. What happened was our market became a more tech-driven market. So the summer rallies evolved, and more or less they're based on the outlook of second quarter earnings from tech companies. So they're pretty strong rallies, actually. And if you look at the 12-day period that begins the third to last trading day of June and it ends July's 9th trading day, that 12-day period has averaged a 3.2% gain in the Nasdaq since 1987, and that's compared to a 0.1% gain for the Nasdaq on average since 1987 for July. So typically it's a pretty strong month for the Nasdaq. I'm not going to go into the market today. I'm just going to show you a couple ideas I have for longs and shorts. And I have a bunch of notes, so I might be back and forth here a little bit. I'm a little disorganized tonight, so forgive me. But the first up is CRY, which is CryoLife Inc. And we are looking at a long version of 3C, which is my personal indicator that I developed using Warden's custom indicators on Telechart. And presumably it shows accumulation distribution. And the idea being, here's an hourly chart. I'm going to zoom out a little bit. Higher highs in price should be accompanied by higher highs in the indicator. When we have a situation like this, when price is going up, indicators going down, I assume this to be distribution, and this would be called a negative divergence. Now, distribution is not an event where you can say, well, there's distribution, let's short now. That can go on for weeks, months. I suppose it could go on even longer than that. But we try to pinpoint it by looking at different time frames. So we're looking at an hourly time frame right now, and we can see throughout May as prices moved higher, this indicator's moved lower. So this is the kind of setup that I like to short. One of the interesting things about this indicator is in different time frames we can have different findings. I'm going to show you a faster version of this indicator, and it is also going to be a 5-minute chart. And now what we're seeing is a positive divergence in the very same stock. So we can see price over the last few days declining in this indicator, moving up with presumable accumulation. So what this tells me is there's a good probability that CRY will rally a little bit, and that's what we like to see. When we short a stock, we want to short them. Really, you're shorting weakness, but I like to short them on rallies, so in effect, you're shorting strength to some degree. Oversold bounces or whatever, whatever your setup is. So this might be a decent setup. We might see a rally here in the next day or so, and that might provide a good entry for a short. A couple of things, I can pull up blocks real quick and show you a couple things. I have a ton of indicators on this blocks, and it's all scrunched down to fit into this video, so it's a little bit difficult to see. But a couple things I follow, the latest short interest ratio on CRY is very, very low, under 1 day, you can see over here. And presumably that's because it's had a pretty spectacular rally. In fact, let's take a look at this rally and see what it was here from, let's take it from the beginning of April to the current price, 72%. So I guess it's not any wonder that there's not a lot of shorts hanging around CRY. I'm going to show you real quick another thing here on the chart. We're going to look at price and volume. Let me just get rid of this indicator. And we're going to start with an hourly chart. And one of the things I want to show you is support and resistance here. I really like gaps. I think gaps provide really good support and resistance. There's a gap on the hourly chart. So I'm going to say that between that gap and the action that we saw in here and the little miniature tweezer top that we have right there, I'm going to say resistance is in the 1490 area. So if we can get a rally up to 1490 on weak volume, this might be a pretty decent short. A couple other things, let me just clear this off the screen and refer to my notes. Let me zoom out a little bit. I'm going to draw some trend lines for you. Here we're looking at the month of May, and here's a couple little trend lines real quick. Let's take it from in here. We can see this channel could be drawn like this. We could look at this as a rising wedge that broke down, or we can kind of look at this as a channel that it's in the bottom half. I'm kind of more looking at this as a rising wedge that is broken down here in the month of June. We can see volume over here has diminished. Whatever it is, it's a pattern that looks to me like it's falling apart. The trading range is getting tighter, the volume is getting lower. So I like CRY as a possible short, and we want to be careful, of course. We want to set those stops. If it goes too much over that level that we were looking at over here, I would say, you know, we're going to short it maybe 1480, 1490. If it goes over this area in here, makes a new high, then obviously you might want to stop out of that stock. I might have time to show you one more in this video. Next up is SNCI, which is Sonic Innovations. Let me just move my notes down here a little bit. And again, we're looking at 3C, and this is a longer version of 3C. It's a little difficult to see, but the stock has made some new highs in this area, and the indicator really hasn't participated like I would expect it to. So I'm going to call that a negative divergence, although it's not the best looking negative divergence I've seen. On the hourly here, let me zoom out a little bit. You can see price has just been rallying the last couple of months, and this indicator's been going down. Like I said, distribution can occur over a fairly long period of time, but to me this stock does not look like it's getting any healthier or any stronger. So I think that's an interesting development there. I also want to show you the half an hour chart real quick. And here's a nice clean divergence that worked out pretty well. You can see we had the higher highs being made, and then we got another high up here and a negative divergence right there, and we had a little breakdown on that. And I'm going to say, let's take a look real quick. I think I've got about a minute left. Clean up this chart. We're going to take a look at price and volume. Let me get rid of this indicator. And we're going to look at an hourly chart. And I am again going to draw some trend lines for you. I'm in a trend line kind of mood tonight. Here's one. I'm going to take this other one up here. Again, we see something that looks a little bit like a rising wedge. Rising wedges, by the way, are bearish formations. You know, this is not textbook, it's not perfect, but again, we have that diminishing volume, more or less, and a rising wedge, basically, a couple different scenarios. It could break down and pull back up to the bottom of the wedge and be a good short there. You could see a little pop to run the stops, but you know, as it stands now, I would keep an eye on SNCI. I think it's a decent looking position. So that's it for this video. I'm going to come back, I think, with couple more ideas, and I'll see you in a minute.